If you want to invest in different kind of projects or portfolios, you need to have a proper analysis about where you want to invest and what kind of products you are going to invest in. Economic analysis. So it is about the overall microeconomic as well as the macroeconomic aspects of the particular country. Agriculture and monsoon is also one of the important measure that we need to analyze. Why? Because agriculture is an important industry in India. So we call it as agriculture is the backbone of India. Hello students, how are you all? I hope you are doing good. So I welcome you to the second unit in the investment management subject. So in today's session, we are going to learn about important concept called EIC framework. So we are going to learn what is EIC, so why it is important in case of especially investment decisions. So before we move on into the brief session, so let me give my introduction. I'm Vaishnavi, Faculty of Commerce from Vidhyaashram First Grade College, Temple of Excellence, MYSURU. So we'll see with the agenda first. So first we are going to learn about fundamental analysis. So this is a basic concept before you are going to do the investment decisions. So first we are going to learn what is fundamental analysis, introduction of fundamental analysis. Then as I've told, we are going to learn what is EIC framework. Next we are going to learn under the EIC framework, one of the important analysis is called economic analysis. Then measures of economic analysis. Then next analysis is industry analysis and industry life cycle. So in today's session, we are going to only discuss about the half part of the technique of fundamental analysis, that is called EIC. So we are only going to discuss about economic as well as the industry analysis in the investment decisions. So without a further ado, we'll start with the introduction, fundamental analysis. Yeah. So what is a fundamental analysis? So if you want to have or if you want to earn more money in the future, so you need to invest some of the amount into the investment options. Like we have got stocks, we have got fixed deposits, we have got recurring deposits, we have got mutual funds, etc. Okay. So if you want to invest on it, so you need to have an analysis of it. Okay. So especially if you are going to invest in any market, like the money market or in case of capital market, you need to have a proper analysis that what is the market is about. Okay, so what are all the players are there in the market? Who are all the players are there in the market? So what are the type of the products that they have got? So what are all the performance of those products in the industry, in the market? So what kind of companies are there? What kind of industry that you're going to invest in for? Like we have got different type of industry. We have tech industry, we have infrastructure, we have got environmental welfare industries. So if you want to invest in different kind of projects or portfolios, you need to have a proper analysis about where you want to invest and what kind of products you are going to invest in. Okay, so that is all about the fundamental analysis. So we'll see the introduction. So fundamental analysis is a method of determining the stock real or fair market value. Fundamental analysis is also termed as a method of measuring a stock's intrinsic value by examining the related economic and financial factors. So fundamental analysis is all about the analysis about the stock's fair market value or the market value, and to analyze the intrinsic value of the stocks that are in the market, and it is related to the analysis of economic as well as financial factors of the industry, of the economy or regarding the company. Okay. So in other words, fundamental analysis is a detailed analysis of the fundamental factors affecting the performance of the company. So you are going to analyze each and every aspects or variables that are going to affect the performance of the product, performance of the company, and performance of the market. So the end goal is to arrive at a number that an investor can compare with the security's current price in order to see whether security is undervalued or overvalued. So why we are doing the fundamental analysis? So the simple answer is that to analyze what is the current price and what is the market price of the stocks or bonds or any securities in the market, and to make a proper investment decision. Okay, so why we are all doing all this kind of analysis? The basic answer or the basic reason or objective here is what? To make a proper investment decision or proper investment portfolio so that you can get the higher returns and so that you can reduce your risk. Okay, that's the basic objective behind the EIC, the fundamental analysis. So in order to analyze a fundamental analysis, there is a simple technique called EIC framework. So we'll see what is the EIC framework. So it is a framework that has been basically to analyze the fundamental aspects of the market. So under EIC, we are going to have economic, industry and company analysis we are going to do it. So that is called EIC framework. So first we'll start with the first E, that is called economic analysis. So economic analysis, so it is about the overall microeconomic as well as the macroeconomic aspects of the particular country. Okay, so economic analysis provide an insight to the essentials of an economy. Okay, that is regarding all the factors that improvises the variables of the economy in a market. Okay, so it is a systematic process for determining the optimum use of scarce resources and selecting the best alternative to achieve the economic goal. So it is about analyzing the best systematic analysis and to achieving your economic goal. So we are going to do the economic analysis. Moreover, economic analysis helps in assessing the causes of different economic problems such as inflation, depression and economic instability. So we are going to analyze about all the factors like inflation rates, then repo rates, what is interest rates in the country. Then we are going to also look into the tax rates. So what is the tax stability, what is the economic stability, what is the government stability inside the particular country. So it is performed by taking into the consideration various economic variables such as demand, supply, prices, production, cost, wages, labor and capital. So these are all the kind of factors that are going to influence the economic development in a country. So what are those factors? Like demand and supply of the products, prices of the products, that is inflation rates products, then production costs, then wages, then labor and capital related aspects. Okay, so what are the measures of the economic analysis? Under that first one, gross domestic product. Okay, so this you might have listened or you might have heard about the gross domestic product. It's a basic GDP that what we usually analyze for the economic development in a particular year. Okay, the economic activity is measured by aggregating the indicators such as the level of production and national output. So how much is the actual output and what is the level of the production of the company or different industries in a particular year. Okay, so the most widely and commonly quoted measure is gross domestic product, so which is a total value of all financial goods and services newly produced within the country's boundaries with the domestic factors of production. This is important here. So it is about the total value of all final goods or services that are manufactured within a country, that is within the boundary, and those should be newly produced by using the factors of the production. So analyzing the GDP also, you can analyze what is the actual performance of the industries in the country. So next is gross national product. So this is also one of the familiar term that you might have heard number of times. Okay, so it is a simple measure which measures the total value of all final goods and services newly produced by an economy, and it includes income generated abroad. So it also includes the income generated abroad as well as the value of all the goods and services that are being manufactured newly inside the country, and it also includes the income generated abroad. So the GDP or GNP are particularly the growth rate of the relevant investment for two reasons. One is good GDP growth means continuous income for individuals and hence surplus money can be deployed for investments. Then second advantage is corporate growth is directly influenced by the GDP growth. So by analyzing the gross domestic product and gross national product, you can analyze what is the continuous income for the individuals inside the country, as well as you are also going to analyze the corporate growth, which is directly influenced by the GDP growth. So next is about measures of consumer confidence. So the consumer confidence index is one of the strong short-term economic indicators used by the investors to assess whether there is any change of direction in the economy. Okay, so based on the consumer consumption in the country, so based on that, the index is being released by the relevant government. So that will be analyzed by the investors in order to analyze whether there is a change of direction in the economy. Consumer confidence affects spending, which has an impact on corporate profit and levels of employment. So it always have the direct impact on how much the consumers are spending in a country. Okay, so what is their purchasing power and what is their level of spending on the goods and services, so that they can analyze the impact of the corporate profit and levels of the employment. So next measure is about price levels and inflation. So this is also an important measures to analyze what is the economic growth in the country. Okay, the price changes is defined as a rate of change in the price level. So you know that inflation is all about it is a rate of change, percentage of change in the price levels on the commodities. So most economies face positive rates of the inflation year after the year. So sometimes if there is a good performance inside the country, so we are going to we are going to analyze the positive percentages inside the economy. So first index is called the Consumer Price Index, that is CPI, which means it's a measure the average retail prices paid by the consumers for goods and services bought by them. So this is the index that is again been released by the RBI. So the Consumer Price Index is a measure that usually analyzes the average prices that are being paid by the consumers in order to avail the goods or services in a particular year. So the second price index is used to measure the inflation rate, called the Producer Price Index. So one is Consumer Price Index, the second is called the Producer Price Index. So this is used to analyze the inflation rates in the country. The third is the broadest measure of inflation, that is called Implicit GDP Price Deflator. So another kind of price index is used to analyze the overall impact of the GDP and the price deflator. So next measure is about agriculture and monsoons. So agriculture and monsoons is also one of the important measure that we need to analyze. Why? Because agriculture is an important industry in India. So we call it as agriculture is the backbone of India. So we are being an major exporter for many kind of goods to the other countries. Okay, so agriculture is directly and indirectly linked with the industries. So hence increase or decrease in the agriculture production has a significant impact on the industrial production and corporate performance. Okay, so as you know that agriculture plays a very important aspect here in the performance of an economy. So this plays a high significant role in the performance of the industries as well. So companies using agricultural raw materials as inputs or supplying inputs to agriculture are directly affected by the changes in the agriculture production. Then you know that like if there is a less monsoons, then we are going to have, that is going to affect the agricultural production in the country. So then if it is been affected, then it is also directly going to impact the performance of the industries. So analyzing of the agricultural aspects is also an important economic analysis before the investments. So next is about interest rates. Okay, so interest rates, as you know that these have been fixed by the apex institution in India, that is called RBI. So they usually fix the all type of interest rates on loans for the that are being availed to the public. The concept of interest rates is used by the economists is the same as the one that is widely used by the ordinary people. So there's the same kind of interest rates that we usually analyze to how much interest that we are going to pay, the principal amount that we are going to take the loan. Okay, so the interest rates is invariably quoted in nominal terms, that is it is not adjusted for inflation. So thus commonly followed interest rate is the nominal interest rate. So as I've told, the interest rates that are been fixed by the RBI here, so it has been commonly been regulated by the RBI based on the performance of the banks inside the country. So next is about government budget and deficit. Okay, so it is also plays a high impact. So as you know that for every year the central government as a state government will go for a budget meeting. So based on that also the investment opportunities will be increasing or decreasing. So the government plays an important role in the growth of an economy. The government prepares a central budget which provides a complete information on the revenue, expenditure and deficits of the government for a given period. So you know that like we usually hear about the budget news. So it has been implemented by the central government as well as state government for the economic development of the respective areas. Okay, so it has been usually provided the complete information about the expenses or any kind of deficits that they are going to get in the future, and how much is the kind of budget they are going to allot it for the different industries. Okay, so next is about tax structure. So tax structure also plays a high impact on the investment, because you are going to pay the taxes on the investments returns that what you are going to get. Okay, that is called TDS. So say for example you have invested in mutual funds, so on that also you are supposed to pay the tax percentages based on the total amount of returns that what you have got. So the same way tax structure also plays a high impact here, because based on the tax that you're going to pay, you're supposed to analyze the investment decisions. So the business community eagerly awaits the government announcements regarding the tax policy in March every year. The type of tax exemptions has an impact on the profitability of the industries. Concessions and incentives given to certain industries encourage the investment in that industry and have a favorable impact on the stock market. So as you know that, so if it is of any e-stocks, that is if you are going to invest on any environmental project, so then you are going to get a lesser taxes. So in that way the tax rates also plays a heavy impact on the performance of the industries. So as they are supposed to pay the corporate tax to the income tax department, so they are supposed to pay some tax amount for every year. So that also again have a direct impact on the investment options. So the investor, as an investor, you are going to choose those kind of projects which are having less tax rates on the overall return. So tax rates also plays a high impact on it. So next is about the industry analysis. So these are all the important measures that we have discussed now for analyzing the economic aspects of the country. Next is industry analysis. So we are going to analyze what kind of industry that we are going to invest it on. So as there are different industries we have got manufacturing industry, we have got agriculture industry, we have got technological industry, we have got infrastructure industry, we have got environmental projects. So there are different types of industries are there. So if you are going to invest in any particular industry or in any particular company, you need to analyze what is the company's procedures or what is the company operation. Okay, then you can analyze what kind of industry that the companies comes under. So industry analysis is a type of an investment research that begins by focuses in the status of an industry or industrial sector. It is a form of fundamental analysis involving the process of making investment decisions based on the different stages of an industry at a during given point in time. The type of position taken will depend on the firm's specific characters as well as whether the industry is at in life cycle. So based on the industry life cycle also, investors, they are going to decide on which kind of project or which kind of industry they are going to invest in. So as I've told, the industry life cycle plays a high impact here. So we'll analyze what is the industry analysis. So under that is called industry life cycle. So as there is a product life cycle, so in the same way there is a industry life cycle. So first is pioneer stage. So that is called the initial stages of a company. Okay. In that stage, new technologies like personal computers or wireless communication portray the initial stages of an industry. At this stage, it is very difficult to anticipate which firm will succeed. Some firms will be total success, while some might be failing completely. Okay, so as it is an initial one, any kind of new technology or new innovation will be implemented in those kind of firms, and we are going to have a high impact on the performance of the company. So we are going to just check how the company is going to perform, whether it is going to have a hit or miss in the market. So this is a industry life cycle. So as I've told, introduction stage, expansion stage, mature stage, and decline stage. So now we have discussed about the introduction stage, that is called pioneer stage. So next is about the growth stage or expansion stage. Okay, so under that, once the product has proved itself in the market, several leaders in the industry start surfacing. The startup stage survivors become more stable and market share can be easily envisaged. So next, after the pioneer stage, next is called growth stage. So under that, the product has been proved inside the market regarding the performance, and the people have also started to accept the product inside the market. Okay, so the performance of an industry in general will be more minutely tracked by the performance of the firms that have survived. So we are going to have a keen knowledge or keen observation about the performance of the firms in the different sectors. So based on that, we are going to have a comparison on the similar type of the industries in the market. So the product breakthrough and the market price is used commonly. The growth rate of the industry is still faster than the rest of the economy. So next stage is about maturity and stabilization stage. Okay, so under that, the product has attained full aptitude to be consumed at this stage by the user. So any growth from this point just tracks the growth of the economy in general. So in this stage, as a product gets more and more standardized, it compels the producers to compete heavily on the price basis. So in case of the maturity, the product have attained nice goodwill in the market, and many people started to consume the product or goods or services that are provided by the company, and it is having the higher market share inside the market. Okay, so at this stage, all the prices are being standardized, and it is compelled the producers, they are going to compete with their competitors heavily on the base of the price. Okay, so next stage is about decline stage. Okay, so under this stage, the cost become counter optimal, then sales volume decline or stabilizes, then prices or profitability will be diminishing, and profit becomes more a challenge of production, or there is a disturbance on the total number of sales. Okay, so if the decline stage is there in the company, so these are the features that usually takes place. The costs will be higher and the profit will be less, and the sales volume will be stabilized or decreased, and the profit will be diminished, and there is a decline in the total sales. So these are the 4 stages of the industry life cycle. So in the coming session, we are going to learn about these topics, that is characteristics of an industry analysis, then what is company analysis, then what are the techniques of company analysis, then valuation of securities, valuation of bonds and debentures. So these are the important topics that we are going to learn. So as I've told, EIC framework is very much important here, and that is also an important concept for your examination point of view as well. So I kindly request you to have a keen concept observation regarding the things that we are going to discuss in this session and the coming sessions. So I'll meet you in the coming session with the topics that I have mentioned now. So thank you so much.